Here are 78 charts that explain exactly what's going on. First up, we have to go back in history to understand how we got here. If we zoom out, we can see that the United States long-term gross domestic product, GDP, it's up and to the right throughout history. We have gone up 9x since 1950. Then we can see that the average GDP growth has been slowing down though. It used to be 4% back in the 1960s, and now it sits at just 2% a year. On top of that, we had 2 negative GDP quarters in 2022, but there has been a return to positivity in 2023. In Q2 of this year, GDP grew by 2.4%. The United States has been on a tear since 2008 compared to Europe. Europe has been stagnating and the United States has been growing. On top of that, within the United States, we see that out west and in the south, GDP is growing at a much faster clip than in the Northeast and the Midwest. On top of that, we can look at CPI, which has been much higher than the 2% target. We reached 9% in 2022, but we're now down to 3% CPI, and it is expected to return to the Federal Reserve's target of 2% over the next 18 months. The Fed has had a big hand in that. They've raised interest rates from 0 to 5.25% since March of 2022, which is a big contributor to the slowdown in inflation, and it is the fastest pace of interest rate hikes in history. On top of that, the United States debt to GDP is at 97%, and it's continuing to go up by 2 percentage points a year. With the McCarthy-Biden debt ceiling deal, that 2% is likely to stick. If we look at Japan, their debt to GDP is at 220%, and its inflation hasn't exploded, suggesting that the United States debt to GDP could take decades to become a major problem. But there have been some problems in the economy. There have been significant layoffs at tech companies. We also have seen in the broader economy that there's continued job growth since the COVID dip. So when you compare the tech industry to the overall economy, there are 2 different stories. This translates to record low unemployment rates, hovering below 4%, which we haven't seen in a long time. But most economists still believe that there will be a recession later this year. On top of that, home prices have started to fall, which is the first time since 2012. With higher interest rates, home buyers lose purchasing power, which makes it harder for them to buy homes. And a record low 21% say now it is a good time to buy a house. That means nearly 80% of home buyers are not on the market. This is likely due to high rates, as most still expect home prices to increase in value. So they think home prices are going to go up, but because of those high interest rates, they are not thinking right now is a good time to actually buy homes. U.S. manufacturing is a whole nother story. U.S. manufacturing construction is up 68% since the IRA and CHIPS Act. We have seen the United States and China continue a trade war with more restrictions coming, which should promote U.S. manufacturing, but also higher prices. On the oil front, oil prices have significantly fallen over the past 12 months and now sit around $80. Even as the Saudi-led OPEC Plus attempt to push prices higher, in July, the Saudis are expected to drop their production from 10 million to 9 million barrels a day. As they drop that production, it has an impact on prices. Now, the S&P 500 has had a great 2023, especially the mega cap tech stocks. We saw Apple cross over a $3 trillion market cap, and now 5 US companies are worth more than $1 trillion. On the other hand, 2023 has been marked by record bank failures, including 3 of the 4 largest bank failures in history. The Fed reacted quickly by rapidly increasing liquidity in March, and it appears to have stopped a major banking crisis, especially at the largest banks. Now, if we go and we look at AI, NVIDIA rose over 200% year to date. We have seen their revenue still smaller than Intel's, which is worth $125 billion though. And NVIDIA's price-to-earnings ratio is the highest among US semiconductor companies. The AI revolution may be helping the performance of tech stocks, and ChatGPT was the fastest app to 1 million users. .ai domain registrations boomed in December 2022 after ChatGPT's launch, and 57% of Americans have heard of ChatGPT, 38% of them have heard of Google's Bard, and 23% of them have heard of Stability AI. OpenAI's GPT-4 is the clear leader in the large language model race, with Anthropic's Claude and Meta's Llama right behind. Anthropic, Inflection, and Elon Musk's new xAI have funding of around $1 billion, which is a lot, but on a different magnitude when compared to OpenAI's $11 billion. Google is also in the race, but so far its models are smaller and of lower quality than OpenAI's. Google is expected to launch Gemini AI later this year, and it's expected to have more parameters than GPT-4. Gemini has a 77% chance of beating GPT-4 on release, according to Manifold's prediction markets. That is a big percentage. And Meta's Llama and its derivatives are the leading open source models, now commercially available with the release of Llama 2. Open source text-to-speech AI models have been launched and achieved exceptional results. And we've seen AI startups are being created for a diverse range of applications. California has a concentration of 70% of the top 50 AI startups, which dwarfs any other region. And we've seen AR and VR making big news as well, with the announcement of Apple's Vision Pro. Sales are 20 million devices are expected over the next 5 years, which is a big number as well. But the investment in AR and VR venture capital has declined since 2022, which is at direct odds for the investment that's been happening in the artificial intelligence industry. Longevity is another category where VCs are putting dollars. We saw longevity venture capital dollars inching up in Q2 2023 after having a very poor Q1. And then weight loss drugs seem to be taking the world by storm. They've been booming, with retatrutide reaching 24% weight loss in 48 weeks. There's a new Alzheimer's drug that now is slowing disease by 35% in early stage patients, and defense venture capital reached a record high of $41 billion annualized. In the broader venture capital world, US funding is about 13% down quarter over quarter, and it's down 48% year over year to only about $39.8 billion in Q2. The median pre-money seed valuations remained right around $11 million, and down rounds continue to increase in prevalence. We've seen the trend of fewer mega funds over $1 billion in 2023. There was over 30 of them last year, and now only having somewhere around 5 or 6. The venture capitalists are buying stock of private startups in secondary markets, though. We continue to see them deploying capital outside of the public markets. VCs are also doubling down on their own portfolio companies, sometimes out of excitement and other times out of a direct need. In China, venture capital has suffered significantly. US dollar-denominated fundraising went from $49 billion in 2021 to only $1 billion so far in 2023. Apple's dominance in mobile continues to increase. It facilitated $1.1 trillion in billings in 2022 with its App Store, which shows a really healthy year-over-year growth rate. And Microsoft is close to purchasing Activision after a US court rejected the FTC's plea to halt the deal, and negotiations continue with the UK regulator. In October of 2022, Twitter was purchased by Elon Musk. Revenue has continued to fall under his leadership. This led to Fidelity repricing its Twitter stock from a $34 billion valuation all the way down to $11 billion. Most investors think Twitter will never be worth the $44 billion that Elon paid for it, and these same investors are also worried about Elon being a risk for Tesla. Meanwhile, Twitter is rebranding as X, the everything app, and Meta launched a competitor, Threads, which is a direct copy of Twitter. Threads had a great few first days, but daily active users have plummeted since. Meta has been very successful over the years at copying features from rivals, and Threads is their latest example. Now, Elon Musk, he doesn't really pay attention to that stuff because he's back as the world's #1 richest person, beating out Bernard Arnault, Jeff Bezos, Bill Gates, Larry Ellison, Steve Ballmer, Warren Buffett, Larry Page. Elon Musk's net worth has had quite a volatile year, very similar to the stock market, and his net worth has shot up mostly thanks to a recovery of Tesla stock. Tesla continues to dominate the United States EV market. There's no one even close on these charts. They're #1 globally as well if you only count EV-only cars ahead of BYD. Now, Tesla has continuously cut the prices of its cars, leading its margins to near auto industry average of 8%. And then if we switch over to the crypto world, a US court that ripples sales of cryptos via exchanges has decided that they were not sales of securities. We also saw the launch of WorldCoin, Sam Altman's crypto, that launched with a $23 billion market cap. And last year, after FTX went bankrupt with $12 billion of customer funds missing, the new management that has come in has already recovered $7 billion in assets. Now there's a debate around remote or in-office work. Hybrid companies and employees have settled on about 2 to 3 days a week of work in the office. But that may or may not have an impact on life expectancy. The life expectancy in the United States has fallen to 76 years, which marks 20 years of no gains, wiping out all the progress that had been made. The United States fertility rate closed 2022 at 1.665, which is much below the replacement level that we need. Birth rates continue to be higher in the 25 to 34 age group, and lower birth rates led the US population to grow more slowly than in years past. And if we tie it all back with the first slide, we have US GDP per capita since 1950. In sum, there may be some small problems with the economy, but never, ever bet against America. If you enjoyed this presentation, make sure you go check out Bay Area Times. You can go to bayareatimes.com/subscribe today and join the free email. It goes out 5 days a week. It includes visuals like these, along with a couple of bullet points explaining the daily news. I really enjoy it, and I think you'll learn a lot from it. bayareatimes.com.